Yeah, you definitely read that title correctly. In this video, I'm going to tell you why I think the altcoins I'm about to mention will dominate this crypto bull run. And importantly, I'm not just talking about make me the most amount of money. I'm talking about in the safest possible way as well. I'm not talking about buying the crap coins, the meme coins, the ones that are outside the top 5,000. I'm talking about genuinely quality altcoins here that will actually perform well, because this area of the industry, historically speaking, bull run on bull run on bull run, does very well. Now, before we jump into it, guys, do not forget, if you find yourself enjoying this, but importantly, learning something new, that's the purpose behind my channel. Hit that like button down there because that helps support me. And of course, you can go ahead and support yourself by subscribing so you can achieve all of your crypto goals in this bull run. Now, before I get into what these altcoins are, I have to tell you the reasons why these altcoins will do well. It doesn't make any sense for me to just give you these altcoins, and I've got 5 of them here today, and just say, hey, good luck, mate, go ahead and buy them or whatever, do what you want with them, and then you're stuck in 5 months going, why did I buy this coin? I have to explain why. But first of all, a very important thing, guys, we are doing an exclusive trading contest for an airdrop to win 10,000 USDT and 5,000 PYTH with CoinW. It is a non-KYC exchange. You don't need a KYC. Anyone around the world can sign up. Use the first link in the description. You will sign up under my link, and then you'll be eligible for this giveaway and contest. We're starting in 3 days, okay? So make sure you get in first. It'll run for 20 days, and whoever pretty much trades the most in futures, make sure you read the T's and C's down here, because it's going to tell you what you need to trade and how much of, but it's basically first in, best dressed. So the faster you get in here, like as soon as possible, begin trading in the next 3 days. Over the 20-day period, you should hopefully get a pretty solid airdrop of not just cash, but also PYTH tokens as well. It's very important. The bull run is going to be kicking up here anytime soon. So get down there, sign up, let's begin. Now, the area is layer ones. If you don't know what layer one is, basically, I'll show you an example here in a second, but a layer one sits beneath everything else in crypto. You have the layer one, as it's called. Ethereum is layer one, okay? Even Bitcoins are layer one, okay? But you have these layer ones that usually support infrastructure. So infrastructure, by this I mean applications, right? Even layer twos like Optimism, Arbitrum, Polygon, and then even support layer threes on top of that, right? Which can be a whole host of different things. So here's how it kind of works. We have the layer one down here. This is like ETH, for example, okay? And then it can support applications like Uniswap, Aave, Maker, on top, which can obviously talk to each other. As you can see, I've tried to represent here. So you can have demand come in for dApps directly on top of a layer one, or you can have layer twos, networks built on top of the main network that also enable applications to be built on top. And then you can have demand for those as well. And again, like I said, you can even have layer threes built on top of the layer twos, which can also support more and more demand. So it's like this moving up the stack thing, but layer ones are usually at the bottom. Actually, technically speaking, you can have layer zeros like Polkadot and Cosmos, so Atom, but usually this stops at layer one, okay? These can support layer ones, which can support layer twos, which can support layer threes, but I don't want to complicate you. For this video, we're talking about layer ones. Now, layer ones can be broken up into 2 different areas. First of all, we have the Web3 layer one, okay? So this is part of my bull run cheat sheet. You guys know the drill. This is available in my private community. Those guys in my private community have like the best resources in the market, period, right? This is one of them. So this is my potential opinion on the growth potential for different areas of the crypto market for this bull run. Web3 layer ones is, as it says, layer ones, but focused on Web3, focused on crypto. That's kind of what I described to you here, okay? Now, we also have another type of layer one called a Web 2 layer one. Now, this is substantially weaker, in my opinion, for performance of the bull run. Why? Because these guys are focused on marketing towards enterprises, towards like Google, Microsoft, and so on, which right now isn't going to attract many people to want to buy the token, like retail, you and I, which means that unfortunately they won't do well this bull run. They'll do well next bull run, where I think utility will really take off and be a really massive narrative. But for this bull run, you can have a mix between the two. Hedera is a prime example of a good mix, right? Focusing on Web3 right now also has a very powerful Web 2 area, but it's still not as powerful as Solana, which focuses primarily on Web 3. That's why people can get very confused. Hedera has all these massive partnerships. Solana has pretty much little. It does have a lot, you know, PayPal and so on, or whatever, Stripe, whatever it's partnered with. But essentially, it's nowhere near to even compare to HBAR's Web 2 partnerships. Yet the market cap's like 60 times more. And it's because it's focused in Web 3. It's focused within crypto itself. So the reason I've picked the following altcoins is actually not because of just, I think they sound cool. We'll go over each of the reasons for each of these coins. But basically, we're going to follow this structure. This is a layer one flywheel. This is what it takes to be a really successful layer one coin in crypto. So it kind of starts here with a good idea, the meme, if you will. I talk about the meme all the time. So you have to have a good founding team and a good idea. Then you have to have strong backing, or at least decent backing usually. And then you pretty much enable miners and validators to come on board, which provide a sort of base to create the sort of application layer, like down here, to create the actual foundation for applications and layer 2s and so on to build on top of it. Once you then have that platform functionality, people are actually securing the network, you can create applications from third-party developers. So I might I want to build my own application, right? I'm not associated directly with the foundation or the team, but I'm a third-party developer, so I can build on the network at that point. This, as well as then obviously creating utility, creates a community, and the flywheel goes back around. Basically, we're talking about network effects. We're talking about Reed's Law. You can create networks and a network and a network. Like, for example, Facebook, right, is a network. It's a layer 1, if you will. But then, of course, you can build sub-communities in Facebook itself, like Facebook groups, which then have smaller communities in those communities, which then have friend networks in those communities, and that's how it sort of branches out. It becomes very, very powerful and therefore reliant on Facebook, and that's what we're ultimately looking for with these 5 altcoins. So if you're sitting there going, Kyron, well, how the hell is this actually going to make me sort of safer gains? How is any of the layer 1 projects actually going to be like sort of a better investment this bull run than maybe some more speculative areas of the market? Well, guys, it's kind of crazy to think of it like this, right? You have all of this demand coming through each layer, if you will. Again, you have layer 3s sometimes. So you have all the demand for layer 3s, demand for layer 2s, demand for the actual applications on the layer 1 itself. And where does this all accrue? It accrues in the fees, right? The fees on the layer 1 itself, which means there's always going to be a demand for the token, which means as long as the fees per transaction aren't like 0.00000001, it's actually kind of good. There is a certain limit. I would probably say anything lower than 0.0001 is a little bit too low for the fees per transaction. In this way, you can have sort of a low amount of transactions and still generate some sort of income. So that, of course, means that we end up making more money. That also means that the treasury itself for the layer 1, right, the guys, the foundation in charge of this, usually take a cut of the fee, which means, guess what? They're going to make money, which ultimately means they're going to invest more into the success of their project, which means, again, we make more money. If you want to learn more about layer 1 flywheel, I'll actually be making a video on this in the private community here sometime soon, a part of my tier 3 lessons. But a good starting point for you guys is Ali Yaha. I think that's how you pronounce his name, Crypto Business Models. This is where I originally learned. It's a 45-minute video, but I'll tell you what, it goes in 2 seconds. Very, very good video. He's an excellent presenter and a very intelligent man, if I do say so myself. So go ahead and watch that if you are interested in learning more about layer 1 projects. So for each of these coins, I'm going to be giving myself just a couple of minutes, 2-3 minutes to explain each of them. So if you want to learn more, the best thing you can do is tell me down below which one you want to see me do either an update video on or a brand new review video on. And the one with the most likes, I will literally consider it in the next week or so. We're looking to come out with about 2-3 weeks of every single day coming out with a brand new crypto review. So I can definitely throw them in there. So make sure you go down there and like whatever one you want to see a review on. So let's begin with the first coin here, Injective. Now, what we're going to do in this video here is actually pick 5 sort of different, but sometimes even similar layer 1s that hit different primary narratives. What do I mean by this word vomit? Well, what I mean is, back over here, we have the Web3 layer 1s. That's what we're going to be focusing, right? So where the most demand will come in for these coins. But most of these coins focus on benefiting one specific area of crypto more than anything else. So for Injective, of course, most of us should know it's focusing on DeFi. DeFi, I've ranked a 9 out of 10 in terms of narrative performance. So you mix Web3 layer 1 at 10 performing with DeFi 9 performing, well, of course, it's likely going to do pretty well because it's a pretty well-situated altcoin. So Injective makes this list 1.7 billion market cap, but I think a massive defining feature of Injective is that most of its tokens are already out. Actually, pretty much all of its tokens are already out. They have inflation, yes, of course, that's a negative, but in terms of their vesting, the distribution, they're all out in the market, guys. And actually, they've recently decided to reduce the inflation from 5 to 10% over here to 4 to 7%. So the bounds are dropping, which is great. Obviously, in some of these proof of stake networks, you have to have, proportion to how many people are staking. These APYs can move around to incentivize more people to stake their tokens. It's a part of crypto economics 101, if you will, for these networks. But following that layer 1 flywheel, the team, first of all, stacked team, right? I can't get into the weeds of it all, but if you want to learn more, very simple, look up Injective Labs team and do some of your own research. These guys are some of the best in the biz for this particular project. So yeah, check out the CEO and CTO and so on. You will be very, very pleased. Needless to say, I think this is one of the reasons why they were able to get such high funding, right? $56.7 million in total funding. And not just that much, but if you actually have a look at who's funding these guys, it's literally people like Mark Cuban. So they have great backers and, of course, a lot of trust at a very, very high angel investor level. They have 165 possible validators, only 60 active right now, but this is what you'll find with the particular type of layer 1 project that Injective actually is. I mentioned before layer 0 altcoins. Well, actually, this sits above a layer 0, which is Cosmos, Atom. So it's actually a layer 1 network built off the Cosmos stack, if you will. And this means that built on Tendermint, you can't really have a lot of validators. It doesn't work like that. It's meant for speed. And that's why they can have things like a full DeFi product as a layer 1 like they do. Of course, they support a DeFi ecosystem as well, which is very, very important. But again, primarily speaking here, they do have, a very fast layer 1 itself that can process many, many transactions a second. Now, we need to obviously have a look at how it's actually performing well with the community, because a big part of being a good layer 1 is actually being able to attract a very strong community. I know this page looks absolutely disgusting right now, but you can usually see cracks in a layer 1 eventually, at least, maybe not straight away, but eventually, when the community begins dying off. This can sustain a project for a period of time, but when you have the community begin fading, this might take 2, 3, 4 years, fair enough. But eventually the community will start falling off if none of this stuff has been taken care of. But fortunately for us, the community is very powerful for Injective, very strong community. 2.7 million daily active interactions over the last 6 months, which, put it this way, is like in the upper echelon of projects for the size of the market cap. 1.7 billion, 2.7 million active interactions per day. Put it this way, roughly it's 1 billion market cap to about 1 million interactions. So it's almost 2xing the standard, which is incredible for a project like this. Now, the active holders here we can see are increasing quite rapidly. However, keep in mind this is saying about 47,000. That's not much. This is only pulling information from one area. So it's a lot more than just that many holders. The only issue I have, considering these Ethereum holders, which is where that information was being pulled from, is that it's about 96% centralized in the top 100. And 87% into the top 10. So that is not amazing, but this is only a specific area of where people hold Injective. So keep that in mind. Also, I don't think this actually takes into consideration the exchange wallets as well. So this can be quite skewed, but nonetheless, it is important to point out. I think either way, layer 1, DeFi, perfect mixture of this is definitely Injective. Now, let's talk about another coin here that actually has a really good vesting schedule, and it's none other than Kaspa. Kaspa, I don't really want to talk too much about because you guys probably know a lot about it. Either way, I'll be quite brief like the rest of these coins. For those of you who don't know, Kaspa is a proof of work blockchain. So it's pretty much like Bitcoin, but Bitcoin has a block after block after block consensus algorithm, essentially to dumb it down, right? These guys have what's called a directed acyclic graph, which means that blocks kind of spitter and spatter all over the place, and they're all linked up with one another, and it just kind of allows it to go. And these guys have a really interesting and unique way to actually come to consensus and enable pretty much an infinite TPS to occur. Super unique. I've made many videos on Kaspa explaining the technology and a breakdown of the visuals. So if you want to go have a look, just type in No BS Crypto Kaspa. So we'll start with the team, of course. I think it's Jonathan is how you pronounce his name. This guy is a legend in the crypto area. He actually founded and created Kaspa. He's kind of obviously, pulled away a little bit in terms of his actual involvement because, of course, Kaspa is designed to be sort of like a Bitcoin where it runs itself. It's fully leaderless and decentralized and so on, which is fantastic. Of course, they do have admin keys to go in there and obviously update the network to enable my problem I'll get to in a second here. And this guy has been cited in the Polkadot white paper and the Ethereum yellow paper and all this amazing stuff. So this guy is a very smart fellow. And again, I don't need to say too much more about the founding team in this case. So Kaspa actually has no investors because the way it works is, again, very much so like Bitcoin, where it started off at block 0, there was no coins at all, and it just started doing what's called fair mining, right? Where basically it just printed one block after the next, and you could go in there and set up your own miner, for example, to begin mining the blockchain. But that's the only way you can receive rewards is by actually mining the blocks itself. So there's no VCs, anything like that, which is why you'll have a look at the hold account over here on CoinCarp, why literally 30.5% is the top 100 holdings, which is fantastic. Of course, we don't have exchanges to really skew this. We do have a few, but it's nothing crazy like the other sort of coins on this list as well. This is a big selling point of Kaspa, right? It's completely into the whole, sort of crypto cypherpunk world dream. And that's why it's got such a strong community, as we'll see here in a second, right? Not amazing TPS, but this is pretty common with a project that doesn't have my concern. I keep mentioning this, it'll come back to in a second here, okay? So 85% currently mined, which is very good as well. What's essentially called disinflation, right? Where as time progresses, it obviously the blocks halve like Bitcoin, where it becomes increasingly less, I guess, rewarding in a way in terms of how much Kaspa you get for mining a block. But of course, in that same respect, it's supposed to, in the same way, sort of incentivize people to buy it more, which then increases the value. So it kind of evens out to some degree. Either way, you can see here, eventually inflation just tapers off to pretty much next to nothing per block. Again, just similar to Bitcoin as well. More frequent halvings, if you will. Now, the interactions for Kaspa is quite impressive, actually. These guys have 2.5 million per day, which again is a little bit under the average. So really looking at 4 million interactions per day here for a project of this size. But you will seldom find projects that do have 4 million plus interactions. Usually at a time like this, especially quite bearish right now, there aren't many projects, even with 10 billion market cap plus, that have 4 million interactions. So it kind of like tapers off after a certain market cap size. Nonetheless, this is quite impressive, actually. Now, these guys have 209 miners and 233 nodes. So in this case, I would probably count them all as validators, if you will. Again, it doesn't work the same way for a proof of work network. If those of you who know, I will still count that as about 250-ish validators, if you will, because technically they all have their part to play in the network. So that's actually quite good for a project this new and this technically small as well. So well done, Kaspa. Now, here's my concern I've had for a while, right? Is that it doesn't have a smart contract layer. Now, some of people have raised concerns. I think someone on Twitter, one of the core developers, actually called me out on this when I made a video on it, saying that Kaspa doesn't need smart contracts. I would disagree. I think for a layer one project to do well in the course of time, you absolutely needed to have this end part here. You need to have applications created to really keep that community incentivized to use it. Otherwise, you're relying on one important thing. You're relying on the bandwagon effect, the tribal nature, language, and belief, which is the weakest possible network effects possible. And all I'm pretty much saying is here, you need people to believe it's going to be useful for something like Bitcoin, like a store of gold, or some sort of transfer of value, right? Sort of like sellable money, if you will. Now, this is important to note because, again, unless Kaspa is, creates the bandwagon effect, creates the belief behind, hey, this is going to be like, the new silver to Bitcoin, and that's its real value, then it'll do well. But other than that, it's going to be hit or miss. So I think it's a good thing. As we can see over here, they are planning to create smart contracts and implement it. Again, this is absolutely necessary. And, I don't want to call it everyone saying that Kaspa didn't need this to begin with, but I think the more you look into network effects and have a look at some of these aspects of human nature that goes into why people adopt things and, things become mimetic, you will quickly realize that it needs to do that, of course. Part of the flywheel, right? So with that being said, Kaspa makes this list as a proof of work, layer one blockchain, great meme behind it, big tick. Now, I'm going to be quite quick here for the next couple ones because I've covered them extensively on the channel, right? One of those is Near Protocol. Been calling this for a long time now. I'll still say it's a quality coin, of course. It's going to do great as Bullrun. I am a firm believer of that. 4.5 billion market cap. Now, again, just sort of like Kaspa, it actually has most of its supply already out. Now, it's different at Kaspa, obviously. This is the vesting schedule. So these are all tokens being sent off to entities who participated in the early rounds, including the team and so on. But this is almost finished, right? It's 1 billion tokens in total. We're at about 900 million right now. So not too far to go, which is fantastic. Of course, I've removed epoch rewards, better known as inflation, because it's a part of the game. These guys also do have deflation. But moving back into what Near Protocol is focusing on, if you actually have a look into their future here, right, the vision for Near Protocol, these guys are really focused on two main areas. One is AI, because Ilya, this guy here who was one of the co-creators, actually invented the transformer model used in things like ChatGPT for AI. GPT, the T being transformer. This guy was a key role in actually forming that. Near Protocol actually started life as an AI project. So there you go, right? Heavily involved in this area. Now, one of the other aspects here is account abstraction. That pretty much means making a unified account or place where you can use a whole bunch of different accounts or services. So Near is trying to essentially be Web3 cloud. It's trying to have everything all in one place. You can not just store stuff and use stuff in a decentralized way, but also access everything in the crypto space from one area, Near Protocol, essentially, right? So this is their sort of model. I think it's great. I think account abstraction, as they mentioned here, will actually be a very big part of the bull run. I'll wait to see it heat up a little bit here, but this is the current market cap and size of it all. Near Protocol is heavily involved with all of this sort of stuff, okay? And as we can see here, it is very important for us to decentralize this sort of stuff because in the Web 2 world, it is heavily in favor of the three big boys, Amazon, Microsoft, and Google. They take up most of the cloud infrastructure. Now, if you throw crypto into the mix, it's going to get even crazier. So, of course, we have to have a decentralized cloud. This is where Near Protocol comes in. Now, they have a lot of funding as well. Like, we're talking about $500 million worth of funding. It just keeps going and going. So yeah, a lot of money is being thrown at this project and for good reason as well. They have 100 validators right now. They're looking to decentralize this. I think the next steps is a couple hundred. And then from there, I think it's 1,000, right? There's a whole process involved with this and it'll get into the technical jargon. I've covered this all, by the way, on a video on Near, I think over 12 months ago now. So they also have 1,900 developers and also 300 applications on it, which is one of the reasons why it's growing so fast. Developers need to build on a layer one, and when the developers come in, you have more people wanting to use the applications, of course. And it was actually cited here as one of the top 9 or 10 projects last year in terms of overall developers. You can see Near Protocol right here from an independent researcher over there. I think it's developer reports. Now, in terms of the community, of course, quite high, 1.2 million interactions. Now, this does spike and move around a little bit for Near Protocol. This is obviously quite low for the size of the market cap. Kaspa has 2 times the amount of interactions, but we've seen that Near Protocol can react very quickly from positive news, which it very easily did. I think it like 2 or 3x, 4x in a very short period of time there based on quality news. So yes, Near Protocol definitely ticks this box in terms of account abstraction and AI for Web3. Now, here is one of my all-time favorite coins, period, and that's ICP. Now, ICP is similar to Near Protocol in the sense that it's basically trying to be like a Web3 sort of cloud infrastructure project, but they're actually hitting AI, and that's their main focus, honestly, in a little bit more of an aggressive way than Near Protocol is, which is why I've kind of focused on this as well. So ICP is currently a $3.5 billion market cap, so it's a bit smaller than Near, a bit smaller than Kaspa, which is surprising. These guys have the largest research and development team in the entire crypto space, with currently 1,600 employee publications and over 250 patents. Mind you, this is a really important part people tend to forget. You don't know what to build or what's important if you haven't done the research, okay? This is why it's the more you know, all right? So that's obviously why I think ICP is ahead of its time, and it really honestly is with some of the technology. Also, again, we have great news from Dominic, the founder in this case. He has stated there is an amazing update coming out here in September. And by the way, they actually are enabling AI to run completely decentralized on the blockchain, unlike any other project. Now, they also have hundreds of millions of dollars worth of fundraising as well. So that's obviously fantastic. And they have 300 ecosystem projects. Because of all this sort of stuff, again, we're following the flywheel here, which then has enabled about 1,500 nodes to be running on the network and about 559 in all the little subnets, all the little micro communities, if you will put it simply. These guys, in terms of their tokenomics, they have what's called disinflation as well, kind of like Kaspa. This does diminish over time, as you can see, until we hit a nice 35% year-on-year inflation. I did forget to mention as well, Near Protocol has a permanent 5% inflation rate as well. Now, the only part of the vesting schedule and the distribution still to come out is for these guys here, right? The seed and private sales, arguably not amazing, but of course, nothing to scoff at. Other projects are way worse than this. And I'd actually argue that if all of the third parties, so to speak, the guys who can dump whenever they want, have their tokens, it's actually worse because they're going to dump all their tokens. They have no more skin in the game. If we do have some of these guys that do have more of their tokens to unlock, they're not going to want to dump the token entirely and kill the project because, of course, that means that we aren't going to make our money. So it's very important to think of every side of the coin. And lastly, of course, the interactions are very skewed on this. I covered this a few days ago, 194,000. I know this is skewed because I do talk extensively about ICP on Twitter, but not enough to garner the #1 creator spot over here for ICP. So this isn't pulling in the information correctly. I know last time I checked it was like many, many millions and something isn't being pulled in correctly yet. So either way, I definitely think the ecosystem is growing for ICP and that is not representing it well. Now, lastly, here's a little hidden gem, if you will, right? A little micro cap I wanted to tell you all about. It's called Massa, right? Now, it's currently at 4 million market cap. So this is for all you guys, especially degens who want the small micro caps. I don't talk about these enough, but I did promise you guys I would talk about them more as the bull run begins to pick up because we have more opportunities to make some pretty decent returns, right? So this coin over here has a pretty strong team, right? The team actually has, again, PhDs all over the place, right? Adrian and Dama, I think that's how you pronounce his name anyway. I could be wrong. I'm sorry, man, if that's not right. But either way, you can see here that they actually have some pretty good history. And again, these guys are all legit. You can go to LinkedIn, have a look. It's great, right? Again, a quality team here helps steers the ship, so to speak. Now, they also promote something called the Nakamoto coefficient, right? The Nakamoto coefficient is something I've brought up many, many times on the channel before. And this is pretty much how decentralized a project is. Essentially, what's the minimum amount of nodes that have to come together to overtake the network, if you will? And these guys have a score, apparently, of over 1,000. This is obviously on their website. You guys can take it at face value, do more research, but nevertheless, that's pretty impressive, right? So that's one thing I wanted to mention as well with these guys, but their main USP is the autonomous smart contracts. They call them ASCs, right? Autonomous smart contracts are pretty interesting because what these enable is for a complete decentralized structure, right? So basically, when we have things like, let's just say a lending protocol, right? A lending protocol, when you decide to borrow some funds from, let's say, Maker, you have to put up some collateral, right? So that might be your ETH to receive some DAI tokens. Well, obviously, if ETH falls down to a certain level, you can actually be liquidated, but the bot that says, hey, this guy's at liquidation levels, if he doesn't give us some more ETH back to put that up, we're going to liquidate him. That little bot is off-chain. That bot is out of crypto on a centralized server somewhere like Amazon Web Service and so on. So basically, these guys put the bots on-chain through automated smart contracts, right? It's all completely updated via the blockchain itself. Not only that, but of course, Massa is quoted here saying they're extremely fast as well, over 10,000 TPS and obviously a high Nakamoto coefficient. So these autonomous smart contracts can be used in many different ways, right? Supply chain management, obviously, right? It can be all coded on the blockchain in a decentralized way. So much so that, of course, if there is some sort of logic or event that happens at some sort of period of time, it can automatically update on the blockchain rather than having to send that information off-chain and back on-chain again. Insurance claims, gaming and NFT, and so on. We'll look at an example of this in a second. These guys, for the size of the project, actually have had a pretty good funding round as well. About $9 million. Again, keep in mind, the market cap right now is a lot less than that, right? It's $4 million. So quite a lot of funding, actually. And so that's why I think, of course, given the market downturn, this is one to look out for, I think, definitely. Now, they do have, again, a few different use cases here we're seeing pop up already in the ecosystem. One of these is the Chameleon team creating their NFT collections. These actually update over a period of time based on logic on the blockchain that enables them to get older and so on and change color, all the rest of it. They also do have an automated market maker on here, decentralized. So again, taking advantage of those automated smart contracts. They, of course, have the marketplace here and all the rest of it. Now, I can't look it up on Lunar Crush. It's so small. Lunar Crush only finds like the top altcoins, essentially, like the top, I think, 200 or 300. So we don't have any information on it in terms of the interactions, but we do have 60,000 followers on Twitter, as well as pretty decent engagement, considering, again, the market isn't too hot. No one's talking, guys. It's unfortunate. Everyone's left. Everyone will come back in when, of course, things begin to heat up again for the better. Alrighty. So let me know what you think down below, guys, of these altcoins, right from the high billion market caps, right down to the low micro caps. Let me know your thoughts, and I'll do a deeper dive later on. Take good care. Talk to you soon. Bye-bye.